Hi guys, a very good evening. Okay, before I start with the session, I'm Siyanshu Budhia and I am going to be taking up your second demo session that is on understanding how to calculate income tax liability and understanding the different terms like taxable income and the other details of calculation of income tax liability as per the UK tax systems, and that is going to be relevant for all the students who are going to be targeting UK tax exam, that is F6, for the March 2026 exam attempts, as well as the ATX students. For them, it is a basics understanding of how to compute UK taxes. Okay, before I proceed, guys, if any one of you can just confirm me and tell me, am I audible and completely my video is okay and there are no challenges, just put that in the chat box, please. Is my audio correct? Okay, thank you. Now we are just going to understand about how do we compute the taxes under the UK tax systems. Now all those who are carrying with them the Indian taxes, guys, just keep that aside because we are not going to be at all mixing the two, and plus there is no similarity between the two. So now I want you all to be completely blank so that when I proceed here you are completely able to understand this. Now, for your section A and B, you use calculators like this. So make sure that you carry your calculators every time for the session, because for the questions that we will be covering today, right now they are not section C questions. So we would be always doing the calculations on the calculator. Now, I would like to first remind you of the few things that we covered in our first session that are relevant for today's session also. The first thing is tax year. So always we will prepare our tax returns based on tax year basis. Like for you, the relevant tax year is 24-25. That means it will start on 6th April 24 and it will end on 5th April 25. Don't forget that. Okay, now I have taken here an example. So we will go to the study text later. But first, let's understand every concept for calculation of income tax liability with the help of this concept. Okay, with this example. So I have taken an example of Richard. Okay, and Mr. Richard's income tax computation is in front of you. So everybody eyes on the screen only. And this is for 24-25, that is your relevant tax year. Okay, now here, normally the income that an individual has, now this is only for individual taxation that I am covering today. Okay, the income that an individual earns, we segregate this income into three main categories. Which are the three main categories? First category is non-savings income. The second category is savings income. And the third category is dividend income. So how do I know which income will fall in which category? Let's look at these categories first, savings and dividend. When I say it is a dividend income, dividend you earn on what generally? Shares. Yes. So simply speaking, when you have dividend income earned from shares, okay, your dividend income will come here. So any kind of dividend income will be clubbed in this heading of dividend income. The second is I will take up the savings income. Now here I will make you understand different terms also. Okay. So now here when I take savings income, what all income will be covered under savings? So savings income typically has interest income. So all interest income, whether you have interest income from deposits, from savings account, from any kind of, you are earning interest income on account of loan that you have given to somebody. So any kind of interest income will be coming here, any category. Here, one category interest income is also essentially included, which is interest from building society. So now comes the question, ma'am, what is a building society? I'm hearing it for the first time. So let me just clarify you here. In the notes, I have included that thing. What is a building society? Okay, these are some terminologies that I will be giving you in the notes. Okay, building society interest. So building society is just like a cooperative society that we have in India. What happens? Few interested people, they come together, they give their money, they pool their money together, and in the group only there is a lender and there is a receiver. So like this only in UK we have popular building societies which is very very popular in UK, and which are very huge, not just few people, lot many thousands of people, they come together and they create this society. The advantage is that for lending purposes they really don't have to venture out, and in between in the within the group only there are lenders and borrowers that are there. Okay, and typically it is very popular from real estate point of view. So we have real estate building societies very very popular in UK. One of the biggest, world's largest building society is Nationwide Building Society, which is also registered in UK. Okay, so if like you have lend out money to somebody in the group, and now you're receiving interest, so you're receiving building society interest. So would that be covered in the interest income? Yes, so that will also be covered in the savings income only. Okay, so when we see the savings income, there I will cover the building society interest also. Okay, so this would include my interest from building society also. Now, what is non-savings income then? The left out category. So whether it's an employment income, it is your rental income that we categorize under property business income. So the terms that we will say that what is covered in NSI is your employment income, property business income. Property business income is your rental income that we receive. Then your trading profits, that is from the business that is earned, trading profits. Okay, all this is covered here. Now you will say, ma'am, what about the income from capital gains? So that is not taxed as per this performer. We have a separate rate and separate taxing system for the same. So when we go to the capital gains, that time I'll explain you there. Okay, now so we have covered about what is NSI, non-savings income. The income which is not relating to interest or dividend is your NSI. Then SI is your savings income, SI, and DI is your dividend income. And these short terms are allowed in your exam as well. So this is the categorization that you will do by default for an individual. Always when you prepare the performer, you will write these three column heads first, and then it is optional to write total also. Okay. Now I will look at the different type of income. So I have already told you the income that will be going in which category. Now today I am not discussing in detail any of the income, because today we are focusing on understanding this performer calculation of the tax liability. So understanding the bands and the other factors we will understand. Okay. Now I have taken an example here. Well, I've taken one example each for NSI, SI as well as DI. So let's look at this here. Now, like I've taken income from employment. Now it is savings income? No. Is it dividend income? No. So will it come under non-savings income? Yes. So under the non-savings category, I will write this income from employment. Then I have building society interest. Interest. It is a part of savings income. So it will come under savings income. Then I have dividend income, because it is dividend, simple. So that means it will come under dividend income. You got all the three incomes, get the total. So first column, first row head, that is you have to know in this performer is total income. Total income is simply income totals. That's all, no adjustments. So I will write here the total of all these incomes in the respective columns, and I can make a final total also. After you have total income, you need to make two adjustments. Okay. One of which we will cover today, but the other we will not cover today. I'll tell you why. So the two adjustments that we do here is qualifying interest relief and loss relief. Why I'm not covering loss relief here? Because loss relief will cover the trading losses and the other losses adjustments, for which we have a dedicated losses chapter, and that I will cover it over there. Okay, now qualifying interest relief. So qualifying interest relief we are going to cover in detail once we cover certain portions. Got it? Once you reduce these two reliefs, now the next question, ma'am, only these two reliefs or anything will be added? No, it's an exhaustive detail. So only these two reliefs you will be reducing. Qualifying interest relief and loss relief. Okay, let's say in my example also, I have not taken that there is no qualifying interest relief and no loss relief is going to be there. Once you adjust the reliefs, then the next subtotal that you get is net income. What if there is no relief? Then total income will be equal to net income, and you can just write one of the terms. So that preferably we use net income as the term to be written. Okay, so we will write there then net income. Clear? Again, net income totals here are same as total income. Now, once you reach at net income stage, you need to make an adjustment for personal allowance. It's like a free benefit given to you. See what happens in UK taxes. When I show you the rate band, you will understand. You don't get any exemptions. Like in India, what happens? A slabs may be starting at 2,50,000 or 3 lakhs or 5 lakhs, so on. Okay, but in UK, slabs will start at zero only. That means you earn £1. Typically, it means you earn £10 and you have to give taxes. It's like that. Okay, so here therefore, we get in some allowances. So in UK, what you will get in the tax structure, you will get a lot of allowances. Allowances means this will reduce your income. So now here, you get PA. We can call it in short form PA. And every year, the PA limits are decided by Finance Act. Sometimes it is increased, sometimes it is constant. The PA limit for 24-25 is 12,570. So for tax year 24-25, personal allowances 12,570. This will be given to you in the tax rates and allowances chart, that is a part of your help box. So even if you forget, this is going to be with you in the exam. Don't forget, don't worry. Okay. Now, so the question comes in, what is the sequence of adjusting the PA? Because I have three kinds of income here: NSI, SI and DI. Non-savings income, savings income and dividend income. So how to adjust this PA? So to adjust this PA, I would do it in a sequence. For tax students, understand that the sequence is predetermined. You need to do it in the sequence only. But for ATX students, the sequence is not predetermined for your syllabus, because as we extend to the advanced level, you will understand that, and that I'm going to cover in tomorrow's session from ATX point of view, that how this will differ in ATX. So ATX students, I will tell you in tomorrow's session. Now, so PA is 12,570 in the sequence of adjusting as is given by HMRC as well as your ACCA examiners. It is first you will use PA against the NSI. Only when the non-savings income becomes zero, only then you will use the balance remaining against SI. And only when it becomes zero, then you will use it against DI, dividend income. You cannot skip the sequence. So if you have non-savings income very low or savings income very low, but dividend income is very huge, can't help it. First NSI, then SI, then DI. So we will adjust in the same sequence. Like in this example, my net income for NSI is 52,000. So I will adjust PA of 12,570 and I am getting a taxable income of 39,430. Now you can see here my PA is fully adjusted here. Since my PA is fully adjusted here, I don't have anything which is left for this or this. So it is dash, no adjustment here. This is the maximum amount that can be adjusted. Next point, ma'am, is if PA is not fully adjusted, can we carry forward it to the next year? No, you cannot. The PA which is lapsed, which is not adjusted, which is remaining, cannot be carried forward into the next tax year. It will lapse in the current tax year only. You cannot take it to the future year. Okay, so no carry back, no brought forward PA and no carry forward PA, nothing. Now, so here, once you adjust your personal allowance, then you get your taxable income. Though these three terminologies are very important: total income, net income, and then taxable income. And the total of net income is also important, and the total of taxable income is also important. That I will tell you. I hope we are clear till this point. If you have any queries, you can ask me in the chat box. Okay. Now let's go forward. So we have got our taxable income, and now I need to tell you how to calculate taxes. So for that, first let me explain you few basic concepts for taxing. Okay, so just be with me. First thing that I will make you understand, and that is again going to be given to you in your tax rates and allowances chart, is your slab rates. What are the slab rates that is applicable on the basis of total taxable income? These slab rates are not applicable individually for NSI or SI or DI, though we calculate taxes individually for these column heads, but the slab rates will be dependent upon what is your total taxable income. Okay, now how do we understand the slab rates? Be with me. So here we have three rate bands, we call it. Okay, the three slabs are the three rate bands. First rate band is known as basic rate band. The second rate band is known as higher rate band. And the third rate band is known as additional rate band. So there are only three rate bands applicable to an individual for taxing. The first rate band, the band is from 0, that is starts from practically 1. So 0 pounds to 37,700 pounds. Okay, this is the first rate band. That simply means that if the total taxable income is still 37,700 pounds only total, then the person is into the basic rate band only. Again, here we have the step-by-step approach, that if the income exceeds 37,700, then go to the second slab. And the second slab is from 37,701 till 125,140. Okay, then the person goes into the higher rate band. Now we use the shortcuts also: BRB, HRB and ARB. Okay, I again repeat, till 37,700 of the total taxable income, the taxpayer is in the basic rate band. Hi Nakul, do you have any question or do you have any query? You can put it in the chat box, don't hesitate. I will take the query. Yeah, okay. So now let's continue. So we have till 37,700 of the total taxable income of the individual, he is into the basic rate band category. The moment his total taxable income exceeds basic rate band till 125,140 of the total taxable income, that level, he would be in the higher rate band. Now let's say the taxpayer's taxable income is 1,80,000. That means it is exceeding the higher rate band also. So beyond 125,140 till no limits, the entire income will then be a part of additional rate band. So we call it as ARB category. Okay. So now based on the total taxable income, the taxpayer will be in the basic rate band or may extend to higher rate band or may extend to additional rate band. Now you will say, ma'am, what is the effect of it? The tax rate in basic rate band is 20%. The tax rate for a higher rate band is 40%. and the tax rate only for that additional rate band is 45%. Again repeat. So BRB is for 20%. When you go to HRB, so that additional income that has gone to HRB will be taxed at 40%. And when you go to ARB, the additional taxable income that is in ARB will be taxed at 45%. Clear? Absolutely. Now, one more point. Based on the total taxable income that I will explain you with the example as well, the category of the taxpayer needs to be decided. That is, what is as per the higher tax rate applicable to him, we will decide whether the taxpayer is a basic rate taxpayer or a higher rate taxpayer or an additional rate taxpayer. How do we understand? Let's see the example. So in the example that we were discussing, what is the total taxable income of the taxpayer? 46,830. Now, is he in the basic rate band? No, because it is beyond 37,700. That means he's already in the higher rate band. He's already entered the higher rate band. Is he in the additional rate band? No, because it is not exceeded 125,140. So now we declare that the maximum rate band that is reached by the taxpayer is higher rate band. So we will call this taxpayer as higher rate taxpayer, HRTP, higher rate taxpayer, which simply means that the highest tax rate applicable to this taxpayer is 40%. Clear till this point? So now we have understood about the rate bands, right? We have understood about the rate bands. We have understood about the tax rates 20, 40, 45. And based on the highest rate band that the taxpayer is going for, going into, he would be categorized as the basic rate taxpayer or a higher rate taxpayer or an additional rate taxpayer. Clear? Okay. Now, the next thing, now let's start taxing. So I'll tell you the rules one by one, okay? But don't go off the focus. Now, let's start taxing. So when we calculate the tax liability, the pro forma is going to be like this. Okay, now how do we tax it? First, you will take the first category, which is your first category, NSI. So write down here non-savings income. What is the taxable income? 39,430. Is this into the basic rate band? No, it has exceeded it because it is going beyond 37,700. So what I will do? I will now tax it as 37,700 will be taxed at 20% because this is the income in BRB. But the income which is beyond 37,700 till 39,430 will be taxed at HRB rate. So we will tax it at 20% till 37,700 and the balance we will tax at 40%. Remember, the total of this should be equivalent to 39,430. Clear? Now write the taxes. Done for NSI, no challenge. Now let's come to SI. So understand that for savings income and for dividend income, HMRC has given some benefits. That means here we have the introduction of nil rate bands. That means that income that will be taxed at 0%. We will not exempt it, but we will tax it at 0%. And since it is taxed at 0%, we call it as nil rate band. So how do we know that what is the savings income that is in nil rate band and how much of the dividend income is in the nil rate band? So for that, let's study the special rules. First, I will take special rule for savings income. So guys, savings income has two nil rate bands. And what are the two nil rate bands? Number one is known as savings starting 5,000 nil rate band. So we call it as savings starting 5,000 nil rate band. This is the first nil rate band. And the second nil rate band is savings nil rate band. Simple. Okay. Now, what is starting nil rate band? For that, I think I will start with a question. Now, just look at the examples here. This is NSI. This is SI. Only two categories I'll take for this example. First example is where my non-savings income is 9,000. My savings income is 4,000. Second example is my non-savings income is 0. Savings income is 10,000. Third example is, I'll take 5 examples. Third example is non-savings income is 1,000. Savings income is 4,000. Fourth example is non-savings income is 25,000. Savings income is 4,000. Third example is non-savings income is 3,000 and savings income is 6,000. So we just need to know what is your nil rate band. So here I will discuss what is the starting nil rate band in each case. Case A, case B, case C, case D, case E. And after that I will discuss what is the savings income, only savings income to be taxed. Okay, savings income to be taxed and the rate of tax. So you'll have clarity of the entire thing. Okay, let's cover this. So I hope you are able to understand the question and I will take it one by one. So look here. First is in the first example, non-savings income is 9,000. Now what is the rate band, the nil rate band that we call it as? Starting 5,000 starting nil rate band. We call it as 5,000 starting nil rate band. That simply means before savings income, please see the non-savings income. Non-savings income, if it is up to 5,000, if it has not crossed 5,000, then whatever is the remaining amount, okay, which is not crossed for 5,000, that amount will reduce your savings income and that will be your starting 5,000 nil rate band. I take the example here. The second one I will take. What is a non-savings income? 0. Has it crossed 5,000? No. How much it needs to cross 5,000? How much it needs till 5,000 level? 5,000 only. My non-savings income is 0. I need 5,000 to make it equal to 5,000. Correct. So this 5,000 then entirely will be available as starting nil rate band for savings. Entire 5,000 will be my 5,000 starting nil rate band. Let's take the second example. The second example I will take this one. Okay, look here. NSI is 1,000. Now how much is the shortfall till 5,000? 4,000. That means now you have full 4,000 available to be adjusted against your savings income. And that is becoming your starting 5,000 savings nil rate band. So I will take it here 4,000. Let's take the first example. How much is NSI? 9,000. Forget about savings income. That you will not see. You will only see NSI. Because that is the income that comes before SI. Okay. How much is NSI? NSI is 9,000. Is this up to 5,000? You will say, no ma'am, it is crossed it. So there is no starting nil rate band available. If it crosses, no starting nil rate band available. Fourth case, 25,000 NSI. Already crossed 5,000, no starting nil rate band of 5,000 is available. Fifth case, 3,000. Now, can you type it in the chat box? How much is the 5,000 starting nil rate band that can be available in this case? When my NSI is 3,000, how much is the 5,000 starting nil rate band available? Type it. If my NSI is 3000, it does not reach 5000 level. Very good, Shankar. So I have 2000, 5000 starting nil rate band available. Wonderful, closed. Now I will not calculate what is my savings income to be taxed because I have another nil rate band available. And that nil rate band is very easy. That simply says, please see the category of the taxpayer. Is the taxpayer a basic rate taxpayer or a higher rate taxpayer or an additional rate taxpayer? So you remember we established the category of the taxpayer. This is the reason why we established. If he is a basic rate taxpayer, then simply savings nil rate band is straight away 1000. That means 1000 of the savings income will be straight away taxed at 0%. Okay, 1000 will be straight away taxed at 0%. And if the category of the taxpayer is higher rate taxpayer, okay, if the category is basic rate taxpayer, straight away 1000 is taxed at 0%. If the category of the taxpayer is higher rate taxpayer, see, the moment you become more richer, these benefits get reduced. So if you are into the higher rate category, now the nil rate band offered to you is only up to 500. That means only up to 500 of the savings income will be taxed at 0%. If you become more richer and it becomes additional rate taxpayer, just give me a minute, please. Yeah, sorry for this break. Yeah. Okay, so where was I? I'll just continue here. Right. So I was just discussing the savings nil rate band. We discussed the starting 5000 nil rate band. Now let's discuss the savings nil rate band. Savings nil rate band will depend upon the category of the taxpayer. If the taxpayer is a basic rate taxpayer, then he will get straight away flat 1000 will be taxed at 0%. That is the nil rate band. If the category of the taxpayer is a higher rate taxpayer, then he will get flat 500 to be taxed at 0%. If the category of the taxpayer is additional rate taxpayer, now is very rich, so he will not get any nil rate band. No. So savings nil rate band is only available to basic rate taxpayer and higher rate taxpayer. 1500. And again, you don't need to learn it. This would be given to you in your tax rates and allowances chart. Okay, now let's look at our question here. Let's see if the taxpayer is only these two income. What is the total taxable income here? 13,000. Here the total is 10,000. Here the total is 5,000. Here the total is 29,000. And here the total is 9,000. In all the cases, coincidentally, he is a basic rate taxpayer because it is not exceeding 37,700. So in all the cases, he will get 1,000 as the nil rate band. Now, that means this will be taxed at 0%, this will be taxed at 0%. So what is the remaining savings income? That will be taxed at 20% because he is a basic rate taxpayer. So the tax rate that is applicable to him will be 20% on the remaining income. So his total income of savings was 4,000. He got 1,000 as the nil rate band. So remaining savings income to be taxed will be 4,000 minus 1,000, which is 3,000. In the second case, his savings nil rate band is 1,000, starting nil rate band is 5,000, and his savings income is 10,000. So the savings income to be taxed will be 10 minus 5 minus 1, which will be equal to 4,000. Okay. Now in the third case, his savings income is 4,000 and he is getting nil rate band of 5,000. So you can never ask HMRC saying that please give me refund. HMRC will never give you refund. It always says that you make it to zero, never negative. So we will say no savings income will be taxed. In the third case, he is having fourth case, savings income is 4,000. He is getting a nil rate band of 1,000. So he will get here 3,000 to be taxed here. And here 6,000 is the savings income. Total nil rate band is 2 plus 1, 3,000. So 6K minus 3,000, that means only 3,000 will be taxed here. Are we absolutely clear with the taxing of savings nil rate band? If there is any confusion, you can ask me. Now, let's do the taxing here in our question. So in our question, let's apply the nil rate bands. Okay. Now, the savings income is only 1,400. What is the category of the taxpayer? He is a higher rate category taxpayer. That means what is a nil rate band available to him? The savings nil rate band 500, right? Because for a higher rate taxpayer, only 500 is allowed as a nil rate band. But let's first check, is 5,000 starting nil rate band applicable? For that, I need to see the non-savings income. Non-savings income is 39,430 beyond 5,000. So no starting 5,000 nil rate band will be applicable. No. Okay. So we can write here, no need to write, understood. Okay. Now, since he is a higher rate taxpayer, he will get 500 as the starting nil rate band, as the nil rate band. So I will write here savings savings nil rate band, which is 500 and it will be taxed at 0%. So 500 taxed at 0%, tax is 0. Now, what about the remaining savings income? 1,400 less 500, you have 900. So that 900 of the remaining savings income will be taxed at higher rate category because already he is in the higher rate category, right? So it will be taxed at 40%. So this 900 will be taxed at 40% and you get 360. Done with the taxing of savings income as well. Now let's move ahead and let's discuss the taxing of dividend income. Excuse me. Now just two rules are applicable for dividend income. First, whether you are a basic rate taxpayer or a higher rate taxpayer or additional rate taxpayer, doesn't matter. Universally, all the taxpayers, everybody who is having dividend income, everybody will enjoy a 500 nil rate band. So you are any taxpayer with any dividend income, you will enjoy 500 as nil rate band flat. And the remaining income will now be taxed at special rates. That means you will not apply 20, 40, 45. And this will also be given to you in your tax rates and allowances chart. So no need to mug up. The special rates are if you are taxing dividend income in the basic rate band, then the tax rate will be lower rate of 8.75. These are special rates for dividend income. Dividend income is always taxed at special rates. If you're taxing dividend income in the higher rate band, then the tax rate for that higher rate band is 33.75%. Again, a lower rate, right, as compared to 40%. If you're taxing dividend income in the additional rate band, then the tax rate applicable will be 39.35%. Again, a lower rate as compared to 45%. So 8.75%, 33.75% and 39.35%. This would be given to you in the exam in your tax rates and allowances chart. So even if you are not remembering them, you can open that help section in the exam and you will be good to go. Good to go. Now let's apply it here in the question. So now what is the dividend income for the taxpayer? 6,000. Irrespective of the category of the taxpayer, you know by default you will give 500 as the nil rate band. So in the dividend income, 500 is nil rate band by default, which is taxed at 0%. Clear? Now what is the remaining dividend income? 6,000 less 500, 5,500. At what rate will I tax? Just see the band in which this income will fall. You know that overall this person is higher rate taxpayer, so additional tax is not getting applied. So this income is falling in the higher rate band. And what is the rate for a higher rate band? 33.75. So we will simply take this remaining income of 5,500. Okay, I think wrongly I have taken here 5,000, it will be 5,500. So I will take this remaining income of 5,500 at 33.75. Got it? Simply, but just remember you will apply the rate which is applicable to dividend income. You will not apply the normal rate of 40% here. So you will take 5,500, tax it at 33.75%, get the totals, and now you will get your total income tax which is payable by the taxpayer, or not payable, which is now chargeable on this income is 10,448. But like I told you in yesterday's lecture, that just like employment income in India, we have TDS. In UK, we have pay as you earn. I will tell you more details about it when we go to that chapter. Okay, so pay as you earn. Now pay here. So basically pay is nothing but the TDS on salary. Let's say in this example, I have taken that the pay, and it is a part of the question. It is not calculations that you have to do. The question is given you that there is pay of 7,600. That means already on the employment income, 7,600 is the tax deducted. So then you will only pay the remaining tax. So the income tax payable will be this total tax less pay. You will reduce pay, so you will get net tax payable of 2,848. When is the tax due? That we will do in the chapter of administration, that we will do later. But I hope we are clear with this. I'll just recap the steps that we have done. First step is to segregate the income into non-savings income, savings income and dividend income, and then get the totals and call it as total income. Then you will adjust the two reliefs, loss relief and the qualifying interest relief, and you will get your net income. From this, you will adjust your PA, personal allowance of 12,570 to get your taxable income. Get the total of taxable income based on which establish the category of the taxpayer. Now you will tax every category separately. Like non-savings income, you will tax based on the rate bands. That says up to 37,700, the person is into the basic rate band. And beyond 37,700 till 125,140, it is the higher rate band. Beyond 125,140 of the total taxable income, it is additional rate band. The tax rates are 20, 40 and 45 respectively. No, rate band is calculated on total taxable income. Got it? Shankar. So we calculated the rate band on this taxable income, because ultimately it is this taxable income on which you pay taxes, right? Got it? Is this clear? Are you clear? Okay. Now, so we have this taxes calculated. Yes. Now, then we went on to understanding how to tax the savings income. It is also taxed as per the normal slab rates of 20, 40, 45. Just that it enjoys two nil rate bands. First is the 5,000 starting nil rate band that just depends upon the level of NSI. So if NSI is till the level NSI does not cross 5,000, on that difference you will get savings starting 5,000 nil rate band. Then based on the category of the taxpayer, we get second nil rate band under savings income. That is, if it is a basic rate category taxpayer, then the 1,000 is flat to be taxed at 0%. That is the nil rate band for basic rate taxpayer. For an additional rate taxpayer, it is 500, that will be taxed at 0%. For a higher rate taxpayer, it is taxed at 500 to be taxed at 0%. For an additional rate taxpayer, no such nil rate bands given. Then you will tax the savings income normally as per the rate bands that the income is falling in. Once you go to dividend income, then the nil rate band is 500 by default for all the category of the taxpayers. Now, once your dividend income, depending upon the rate bands that it is falling in, we apply the special tax rates that is applicable to dividend income. For BRB, the tax rate is 8.75%. For HRB, that is for that rate band, the tax rate is 33.75%. For ARB, the tax rate is 39.35%. Now, in case if you forget the rates, it is going to be given to you in the exam. So once you calculate a total tax liability, if there is any payee, then already the tax has been already deposited by the employer. So you will reduce it from your tax payable. And finally, you will have the amount of liability that will be deposited to HMRC. Clear? Now I'll take a bit more portions in detail. Not in detail, but few more portions to be discussed here. First new portion that I'm taking is that sometimes in some cases your PA amount can be reduced. You will not get full 12,570. You will get a reduced amount. So how do we calculate that reduced PA? That I will explain here. But we call it as abatement of PA. Abatement means reduction in PA. When will that reduction takes place? The deduction will only take place when the adjusted net income of the taxpayer it exceeds 1 lakh. Now the next question, ma'am, what is adjusted net income? I will explain you here, don't worry. So if the adjusted net income of the taxpayer, that is of the total calculations only, if it is more than 1 lakh, then your PA will be tapered, or we call it as abated. Okay, simply it means your PA will be reduced. That is reduction in PA. Okay, so you will have a reduction in PA if your adjusted net income exceeds 1 lakh. So how do we calculate adjusted net income? Please look here. Step 1 is always to calculate adjusted net income, which is net income less two things. We reduce first gross personal pension contributions and gross gift aid donations. Don't worry, I'll explain you here. Okay, but what is net income? Net income is this. Remember, we calculated net income here. The total that you take here, this is your net income. So on this total, you will reduce two things: gross gift aid donation and gross personal pension contribution. I will explain you that quickly. What do we mean by these two terms? Okay, so please look here. First, I will explain the basic terms. What is a gift aid donation and what is a personal pension contribution? Personal pension contribution is like in UK, you have two ways of contributing to the pension schemes. I mean, to safeguard my life after retirement, I have two ways to contribute to pension scheme. One through employer. If you are in an employment, you can contribute it through your employer in the occupational pension schemes that he has entered into. Okay, that he may have subscribed to those schemes, so the employee contribution will go to those schemes. I mean, that's a normal way, like we also do in India, no? You have the provident funds, and that is subscribed by the employer, and the different pension schemes you can contribute to that. So we don't have a provident fund culture in UK, we have a pension fund culture. Now, another way is like people like me who are self-employed, who are not employed anywhere. Now, if I want to safeguard my future, my retirement, I may just contribute to different pension schemes that I've entered on my in my individual capacity. The different banks, insurance providers, private players that provide us with in pension schemes. So when I enroll with any schemes of them, that is my personal pension scheme, because I'm not enrolled in those schemes by virtue of my employer. I have enrolled them myself, right? So that becomes my personal pension scheme. So now if that is a personal pension scheme in which I have enrolled, now that amount will come here. So personal pension contributions. So in a tax year, what is the personal pension contributions that you have made towards those schemes? How much amount that you have paid to those schemes? How much amount you have contributed to those schemes as pension contributions will come here. Got it? So personal and not occupational, only personal pension schemes. That means the amount that you have contributed to those pension schemes in your individual capacity, personal capacity will come here. Now, what is gifted donation? We do donations to different NGOs, different charities, right? It is that. Because when you do donations, it is like a gift. You don't say, no, I have donated 10,000, now you give me two gifts from your society, or you give me something from the society. It's not a barter trading that you do, or it's not a give and take that you do. If you do give and take, that's like selling. So you're not selling here, right? You're just donating out of your love, out of your affection that you are doing that. So that is a gift that you are doing to aid that charity, to aid that project, to aid that NGO. So for that purpose, we call it as a gift aid donation. Got it? So I think we are very clear with these two terms. What is a gift aid donation and what is a PPC, personal pension contribution. Clear? Now I look into this term which says it is gross. So across income tax, attention to all tax and ATX students, across the income tax, wherever you use the gross term, that simply means whatever amount has been paid, if it is net, you will simply gross it up by multiplying 100 by 80. It is a by default, it is a stringent fixed fraction that you will use. Now why? I'll tell you a reason. Let's say when I'm contributing to a donation to a charity, or I'm making my pension contributions. From your pocket, you gave 10,000. But how much is going to the scheme directly? Scheme is not receiving 10,000 directly. To the scheme, it is going only 8,000. And 2,000 actually goes to HMRC. Likewise for charity. HMRC will see whether the conditions for which the scheme was made, is it correct or not? Are they following the rules, regulations or not? Once they are satisfied, then just like we have a TDS file, where they can claim the credit, then the schemes can claim this amount and then they will receive 10,000. So actually when you're paying to the schemes, only to the schemes directly, you are only paying 80%. So therefore, see, when the question is silent, we assume it to be gross. But if the question says it is the net amount, then you have to gross it up to reduce from the net income. How would you gross it up? Simply multiply 100 by 80. And it is a set format that 20% will go to HMRC and 80% will go to the scheme. So there is no changes here. Set format of 100 by 80 you will do. Clear? So if now, step 1, let's recap. Step 1 is calculate ANI. And this you will only do when prima facie your net income looks beyond 1 lakh. Then only you will go to these calculations. Otherwise, you will not waste time. Okay. So, step 1, calculate ANI. ANI is net income total less two things: gross gifted donation, gross personal pension contributions. Clear? Then you will calculate. So I will write down the steps that I already give you in the notes always. So what are the steps to be followed? Please look here. Helpful for you when you're writing your answers in the exam. Step 1, calculate ANI, adjusted net income, which is net income total less gross gift aid donation and less gross personal pension contribution. Step 2, get excess over 1 lakh. Step 3, get 50% of the excess. Okay, I'll take an example, don't worry. And step 4, reduce it from 12,570 of PA to get tapered PA. Okay, now let's take an example. So for example, let's say the net income is 1,50,000 and the question only gives me one gross gifted donation is 30,000. Now calculate what is the tapered PA. So let's apply steps. So here I will write step 1, ANI. ANI will be equivalent to net income, which is 1,50,000 less gross gifted donation 30,000. So I get here 1,20,000. Clear? Now let's go to step 2. Step 2, which is calculate excess over 1 lakh. What is the excess over 1 lakh? 1,20,000 less 1 lakh. So I get here 20,000. So my excess is 1 lakh, excess is 20,000. Okay. Step 3, calculate 50% of the excess. That means you will calculate 50% of 20,000, which is 10,000. So step 4, reduce it from 12,570 to get your tapered PA. So tapered PA will be, that means what is the PA that you're finally getting after all reduction that you can adjust against your net income. So what is the PA that you are getting? 12,570 less 10,000, which is going to be 2,570. So 2,570 is your tapered PA. Got it? 2,570 is your tapered PA, which you are going to finally adjust against the taxable, against the net income. Only 2,570. Now what if your income becomes more? And let's say that this reduction, if it is exceeding even your PA, then will you get a refund from HMRC? No, you will make it 0. So your PA can be tapered to 0. Not negative, but it will be tapered to 0. That means you will not get any PA only. Entire PA will be tapered. Okay? Yes. Absolutely correct, Shankar. Very good. Very good. Okay, I hope I'm clear. So what we have covered here is also tapered PA, the tax calculations. Now, instead of taking any new concepts more today, I think let's do some questions just to have understanding, and then I will just take one concept more for today, that will be marriage allowance. Let's just do 2-3 questions and then we will do marriage allowance. Okay, and the balance portions I will cover tomorrow. So I'm opening the book. This is the book that you will get, custom created by me, that covers everything in detail. So we will cover a lot of portions that I have not covered here today. I will cover them tomorrow. And everything has been explained here. So let's take some questions, guys. Let's do some questions to have practice. And some questions I'll give you in homework. When you're joining tomorrow, you will be solving it. Okay, and this is for your tax students. Typically, ATX students, it is a base thing for you. Tomorrow, I will be, once we complete the tax portions, then I will be discussing about the tax planning point of view from ATX students' point of view as well. Okay, and we'll take up some questions also. Okay, anyways, let's look here. But we still have time for today's session. We will take transferable PA also. But let's do some questions here. Okay. Now, I will take the first question. I'm going to use my calculator. So in 24-25, Claire receives, okay. In 24-25, Claire receives employment income of 95,000, bank interest of 8,000 and dividend of 7,500. Let's calculate the tax liability. So I will solve here. The question solution is already here, but I'll solve it here. So I will write in the heading always when it's a section C answer, then I need to write that calculation of taxable income, or what is it? Calculation of tax liability. No, it is just asking you taxable income. So I can do it here also. Calculation of taxable income for Claire. Okay, let's do it here. So here I will write NSI, SI and DI. What is the, here there is no relief. So if this income becomes my net income. So net income is 95,000 will come under NSI because employment income is NSI. Bank interest is savings income and dividend income is dividend income. I'm writing it in summary here, but in your exam, you will write your incomes in your section C. See, when you're doing a section A or B question, which typically it is a section A or B, no need to write so much because you have to do the answer quickly in 2 minutes, right? So try to increase your speed. So here I will write 8,000 and here I will write 7,500. Clear? Now guys, let's calculate the total because I need to know whether my PA will be tapered or not. So 95,000 plus 8,000 plus 7,500. I get here 1,10,500. Yes, it looks like my PA will be tapered. So here I will reduce PA and I will then get my taxable income. I will just write TI actually to save space. Okay, let's calculate the tapered PA. So please look at my screen and let me do it here. Now, here ANI and NI is same because I don't have any gifted donation given in the question. I don't have any gross personal pension contributions given. Nothing is given. So ANI and NI are same, right? So here my adjusted net income will be 1,10,500. Step 1. Step 2, get excess over 1 lakh, which is 10,500. Step 3, get 50% of excess, which is 10,500 multiplied by 50%, 5250. And step 4 is get the tapered PA. So tapered PA will be 12,570 less 5250, which is 7,320. So I will reduce 7,320 here and completely from NSI because it is getting completely covered here. So no deduction from SI or DI. Now what I get my taxable income, 95,000 less 7,320, which is giving me 8,7680. Then 8,000 less it will be 8,000, and this will be 7,500. Done. Are we clear? The question is not asking me to tax. I will not tax it. Very good. Shankar, are you clear with the error? Are you clear how I got the tapered PA at 7320? Any questions over there? Okay. Now you can do the second one in your homework. Guys, you will find these sheets to be uploaded on my Telegram channel today. So in case if you have not subscribed to the channel, uh, then please subscribe it and you will get your Telegram on my Telegram channel. All these attachments that I'm covering in the demo lectures. Okay, all these notes, questions, you will find it there and along with the solutions. So please try it over there. Okay. Okay, great. Now I will take up the next one. So one calculation I will do for your taxable income, tax calculation. So now here, yeah, let's take a question. Again, this will be your homework question. I will take this question, which is number 5th. Okay, I'm taking the 5th question, guys. Please look at my screen. So here we have an employment income of 46,720 and bank interest of 5,550. Let's calculate the tax liability. So I'm calculating the tax liability and I'm doing the solution for question 5. Employment income is, here we have two categories, SI, NSI and total. So first I will write employment income. Then I will write interest. Employment income is 6,720. That will come under NSI. Interest income is 5,550. Okay, let's get the total to get your net income. Because again, no relief. So net income and total income will be same. So net income here we get is 46,720 and here it is 5,550. Total is going to be 46,720 plus 5,550. It is 8,270. Now stop here. Your net income is not exceeding 1 lakh. Since your net income is not exceeding 1 lakh, then we don't need to look into the tapering of PA. Not every time you will calculate, right? You will only calculate when your net income exceeds 1 lakh. Since it is not exceeding 1 lakh, I will not calculate tapering of PA. No need. And I will just reduce here PA, that will be available in full 12,570 to get my taxable income. So my taxable income will be 46,720 less 12,570, which is 34,150. And here it will be 5,550 and here it will be 8,270. Clear? Done. Now you've got your taxable income. Now let's start to tax. No, I'm sorry. It will not be 8,270. 8,270 less 1,2,570. It will be 69,700. Total will change. 69,700. We can cross check it also. Oh, wait. 46,720 plus 5,550. It is 52. It is 52,720 less 12,570. I get the 39,700. Yes. Okay, clear? Now let's do the tax calculations. Okay, let's do the tax calculations. So income tax. Yeah. I hope you're clear, right? 52,270 only, because we have 46,720 and 555. Yes. Okay, now when I do income tax, first I will take NSI. So here NSI I will take here 34,750. That will be completely covered in the basic rate band. It is not exceeding 37,700. So here I will write basic rate band, and I will write the tax rate 20%, and then I will write tax amount. Okay, that will be 34,150 multiplied by 20%. That will be 6,830. Then I move on to SI. Now check whether savings 5,000 starting nil rate band is applicable or not. So for that, let's check the level of NSI. NSI is 34,150. It's already more than 5,000. So 5,000 starting nil rate band is not available. Now just see the category of the taxpayer. Since it is 39,700, it is crossing the basic rate band. He is a higher rate taxpayer. So that means 500 nil rate band is available. So I will write here 500, and I will write here nil rate band to be taxed at 0%, 0. And the remaining savings income, which is 5550. Now please very much concentrate here, because here you will understand that if the income exceeds, income is a part of both the bands, like basic rate band as well as higher rate band, how do we account for? So here first I will take what is the remaining basic rate band available, and then the other income I will take it to high rate band. Total savings income is, write the total here so that you are never confused. Total savings income is 5550. Okay. Now understand that when I take the basic rate band, I know it is 37,700. From this 34,150, 34,150 we have already taxed for the basic rate band of NSI, and 500, even though it is a nil rate band, but HMRC has laid down that nil rate bands will always use up the rate bands. Okay, nil rate bands will always use up the rate bands. That typically means that your total rate band is 37,700. From there I will reduce 34,150, but I don't have 3550 available. Okay, how you are getting 2020? See, 37,700 is my rate band, right, Shankar? From there, I will reduce 34,150, that we have already used the rate band against the NSI. And as per HMRC, the nil rate bands will also use up the band. That means from 3550 also, now I will reduce 500. Oh, you have calculated. Okay. I am not. Let's see. So now the remaining income which is there of 3050 will be taxed under basic rate band. You can add it. So what you will do, add 3050, add 500 and add 34,150. You should get 37,700. 34,150 plus 500 plus 3050, and you get here 37,700. Now the question again, ma'am, why we have used up the nil rate band? Because HMRC says whether it's a basic rate band or a higher rate band, nil rate bands will use up the band. Doesn't matter. We cannot give you double benefit. That one place you are getting 0%, and the other place we will give you the benefit of enjoying the more rate band also. So your rate band will be reduced by the amount of nil rate band. Okay, I hope I'm clear. So don't worry, just go with me. No need to hurry. No need to hurry. Okay, because right, this was the pointer, right, Shankar? Because we still had basic rate band remaining with us. How do I know? Because last I taxed my NSI and that was not fully using up the band. Since the band is not fully used up, therefore I will have to see what is the rate band remaining. Okay, and here therefore I took what is the band remaining, which is 3050, and so this will be taxed at 0%. This will be taxed at 20%. So how much is it? 3050 multiplied by 20% is 610. And now let's see what is the remaining savings income. So total savings income is 5550, out of which 500 is the nil rate band and 3050 is the basic rate band. So remaining 2000 will go to HRB and that will be taxed at 40%. So the tax will be 2000 multiplied by 40% and we get here 800. Now you add up the two and you get your answer. So I get here 6830 plus 610 plus 800. So the total tax amount comes out to be 8240 is the total tax payable. I hope it is absolutely clear and you are clear and thorough with this concept. So now by doing what we have covered today, you can cover question 1, question 2, question 3, question 4 and question 5, question 6, question 7, question 8. You can cover question 9, question 10. Till this point you can cover conveniently. I'll take one more topic and then even you can cover till question 12. Okay, I'll take one more topic for today. I know it becomes too heavy, then there is no use of understanding the concept. So I'll cover it today till this point, one more topic. Then tomorrow I'll continue from this point and we will cover the remaining chapter. Plus we will take ATX planning portions as well. Okay, let's look at the topic that I want to cover. Okay. The next topic that I want to cover is that is a very logical topic. Now let's say there are two spouses, okay, and this one of the spouse has got very low income like 5000, which is not crossing your PA. And we know that if PA is not used, it will be completely lapsed. So it's like a loss for them as a family, right? One of the income is high and one of the income is low and PA is lost. So HMRC says, okay, let me just plan out something. So HMRC says that look, I will give you a plan and by this plan, what I will do is, by this plan, I will allow you to transfer PA between one spouse to another. So the two spouses, they can transfer PA among themselves. And who can transfer? Spouse 1 to spouse 2 can transfer. And how much? Let's say in my example, 12,570 is the PA. Income is only 5,000. Then can he transfer 7,570 to the spouse? And understand that in income tax, spouse or civil partners, they are treated in the same way. Spouse is when you become husband and wife and marriage is there. Civil partners in UK, they're allowed. That means a live-in relationship, but your relationship should be registered under the Civil Partnership Act. If that is being registered, then whatever benefits a spouse gets, civil partner will get the same benefit. Okay. Now, so wherever I use spouse, I will always use partners because they will get the same benefit. Now, in this case, you are not allowed to transfer any amount of PA that you want. No. There is a fixed amount only that you can transfer. You cannot transfer more than this and you cannot transfer less than this. What is the fixed amount? The fixed amount is 10% of your PA in rounding off. What is your PA? 12,570 multiplied by 10%, it comes out to be 1257. Round it off, it becomes 1260. Okay, so you can transfer only 1260 of the PA from spouse 1 to spouse 2. You cannot transfer more than this, you cannot transfer less than this. So you will transfer exactly 1260 only. This will again be given to you in the exam. And we call this as transferable PA or marriage allowance. So this is popularly termed as marriage allowance or transferable PA. Okay, we call it as transferable PA or marriage allowance. I hope it is absolutely clear till this point. Now, is there any conditions attached? Yes. What are the conditions to be attached? Number one, the marriage relationship or the civil partnership relationship must be in existence. That means there should not be any divorce. Once there's a divorce, the alliance becomes over. No marriage allowance can be enjoyed. Number two, both the spouses should be in the basic rate category only. Very important. That means none of the spouses can be in the higher rate category or additional rate category. Or this will only be allowed if both the spouses are in the basic rate category only. So both spouses should be in basic rate category only. By default, this is a basic requirement. Another point, when this will end. I mean, how this will start? The spouse who wants to transfer PA will make an application to HMRC that look, I want to transfer PA to my spouse. HMRC will allow it and the PA will be transferred. And then it will keep on transferring every year. You cannot take it only for 1 year. Once you have taken the permission, now whether you have PA, whether you have income exceeding PA or it is not exceeding PA, but once you have opted for it, every year 10%, 1260 will be transferred to the other spouse. Every year. You cannot stop it. So the question comes, ma'am, how will this be stopped if I want to stop? This will only be stopped, number one, when the alliance becomes over. Number two, when one of them crosses the basic rate band. Number three, when you're notified to HMRC that, look, I don't want to continue, I want to stop. So only in these three cases it will stop. Otherwise, if you don't stop, it will continue to apply year on year basis. Year on year basis. Clear? Now the question comes, ma'am, how will this be given? Will the other spouse who's receiving it, will it add to 12,570? No. Maximum PA that you can adjust against your taxable income is 12,570 only. This cannot be added. Then how is this enjoyed? This is enjoyed by way of a tax reducer. Okay, this is enjoyed by way of a tax reducer. I will tell you in an example, don't worry. Tax reducer simply means when you calculate tax liability, just like you reduce payee, you will reduce this. And how much to be reduced? Fixed rate of 20% on 1260. So on 1260, you will apply 20%, which is 252. So straight away 252 will reduce your tax liability. And whose tax liability? The one who's receiving the PA. So the one who's receiving the PA, he will not add to the PA. He will just reduce his tax liability by 252 and we will call it as a tax reducer marriage allowance. Tax reducer marriage allowance. I think it's a time that I take an example to make you understand this. Okay, let me first recap the marriage allowance, then I will do a proper understanding with an example. Marriage allowance is basically a benefit given and as a tax planning tool. It can be used when we are planning the taxes for a couple, because then overall family wise the tax liability can be reduced. It is most beneficial when the one of the the spouse has income lower than PA. As a tax planning tool, if one of the spouse has income lower than PA, then it is more benefitable to transfer that PA amount to the second spouse. Condition is that there has to be a relationship of marriage or civil partnership in existence. Number two, both of them should be a basic rate taxpayer only. And then it can make a claim can be made to HMRC to transfer PA between one spouse to another. This will continue to take place year on year basis and can only be stopped when again a claim has been made to stop the transfer, or one of the spouses or both of them move out of the basic rate band, and number three, when their relationship only gets ceased. Okay, and this is given the transferor spouse who's transferring PA will reduce 1260 from his PA, and the transferee spouse who's receiving PA will reduce 252 from the from the tax calculation as a tax reducer. That's all. If let's say next year claim has not been made, and even though the spouse one is requiring the transfer is requiring full PA, because maybe the next year his income becomes 15,000. Now he wants full PA, but then also he will have to transfer 1260 to the to the other spouse, because he has not made a claim to stop it. So then he will continue to do it until he stops it. Let's take a question to understand this better. So I am taking here example 11. Alec and Bertha are a married couple. In the tax year 24-25, Alec has net income of 11,220 and Bertha has a net income of 26,570. All their income is non-savings income, and you can see that he is in the basic rate band and Bertha is also in the basic rate band. But since the Alec net income is lower than the PA limit, so it's better that Alec transfers to Bertha. Alec has made an election to transfer part of his PA. So he has made an election, he can transfer. How much he can transfer? 1260. So Alec will reduce 1260 and Bertha will have a tax reducer of 252 marriage allowance. Okay, calculate Alec and Bertha's taxable income and calculate Bertha's income tax liability. Let's try this question. So here I will write question number 11. Right? Okay, now here I will write for Bertha, Alec, and this is for Bertha. Let's calculate their net income, which is already given to you here, 11,220, and it is given here 26,570. Less PA. Now you know that Alec has opted to transfer PA. So PA that is going to be available with him will be 12,570 less 1260. And she will get full PA of 12,570, no addition to PA here, because she will get tax reducer. So now let's get the taxable income. So taxable income will be here. Now how much is this? This is going to be 12,570 less 1260. We get here 11,310. Now you can see here that the PA is already more than net income, and I told you that income can never be negative. So you can never have it as negative. What you will have it as 0. So since 11,220 less 11,310 will give you negative figure, therefore we will write taxable income as 0. Clear? Now for Bertha, the taxable income will be 26,570 less 12,570, and I get here 14,000. Now let's calculate the tax liability. Shankar, are you clear for ALEC calculation? Oh, I'm sorry. No, I think I've done the correct calculation. 12,570 less 1260. 11,310. Yeah, PA he can only claim up to 11,220. Absolutely correct. So I've just given it here, but we will just claim it for 11,220 so that it becomes 0. Absolutely. I've just shown the calculation here so that it becomes very clear that what is the final amount coming and your answer cannot be negative. Okay, now we have got the taxable income. So now we just need to tax for Bertha. So I will write here income tax and I will do for Bertha. Okay, so now I will take this is the non-savings income only. So 14,000 will be taxed at 20%. So I will get my tax at 14,000 multiplied by 20%. That is 2,800. Now don't forget this is a transferable PA. So you will write here tax reducer. Underline it and write here marriage allowance. Why? Because I will tell you later about one more tax reducer. So you need to mention what is this tax reducer about. So this is marriage allowance. How much? 252. No changes. Okay. Now you reduce it in brackets. However, you can show 1260 multiplied by 20%. Now what is the final tax payable? So final tax payable would be 2,800 less 252 and 2,548 will be tax payable. So it is benefitable from the couple point of view. When it's a tax planning question in your exam, it is very important for you to see this. Okay, why it is benefitable from the couple point of view? Because otherwise, Alec was lapsing his PA. Now, at least by 252, as a couple, their liability is reduced. So, this is a very important planning point also. Whenever your question wants you to plan for taxes, marriage allowance for a couple becomes a very important area. Right? I hope I'm absolutely crystal clear till this point. I will upload these notes as I told you on my Telegram channel. You can download it, practice the homework questions along with the solutions. If you have any doubts, you can ask me. And tomorrow we will finish off with this portion. So if you have any queries or doubts, ask me tomorrow in the class. I hope that today's session was completely understandable and balance portions we will take up tomorrow. See you guys. Thank you for joining and keep practicing, keep studying. Let's meet tomorrow. Yeah, absolutely. Till that time that they are in basic rate band, they are not crossing basic rate band, it's allowed. So even if other spouse has zero income, he can transfer 1260 to the other spouse. Because PA is eligible to him. So any questions and queries, drop it in the comment section or reach out to me on my Insta page, Telegram channel or the YouTube channel. Okay.